Hi, welcome to the Market Alert for Thursday, the 23rd of July 2020. Yesterday, bonds, gold and silver surge as China tensions and bailout uncertainty escalates. Yeah, they need more money to keep the ship afloat. And as we get through the holiday season, school holidays and all the rest of it, where everything's become fairly quiet at the moment, then we'll see things really pick up towards the end of August as more money will be required. I think Trump wants 1.3 trillion, the Democrats want 3 trillion. There's no end to the madness. So again, you're going to see a lot more. And of course, as it says here about the tensions building with China and also the Russiagate thing now in the UK. You can't make this stuff up. You really can't. Anyway, let's have a look at yesterday's trades. Now, as soon as I'd finished recording the market alert yesterday, just managed to upload it onto the site and send the message out. My internet connection went off for most of the day. Came back on at 25 minutes past 2 when the Dow opened up. So let's have a look at that. Well, actually, you know what? Let's start off with the German DAX. I missed all of the trades on the DAX in the morning because of the internet going down, but just a quick review here. Not so much detail. We can see that the market was opened above the 200 MA, traded up to the DP and the BRN here. There was a bit of a struggle, as you can see, with the selling in the up move, and then prices stopped at the DP, put a signal in, great area there, and prices did manage to move down sharply. And half an hour later, there was potential buy signal. You can see it traded to the 200 MA, and if you were a buyer of this, then again, as I've shown in previous videos where we looked in detail, you've got this resistance, you've got the red bar. It's an opportunity to exit stage left out of the trade, which again I've shown you numerous times. And then we had a potential sell with the 200 MA above it, and the market just came down and double bottomed here and then traded sideways. There's a few signals that continued in the aftermarket. I'm looking at the moment to see if it's worth hanging around a bit longer to see if there's a few more trades. And then in the afternoon, there was only the one signal in the DAX, and this moving lower. And interestingly enough, you can't make this up, it actually moved better than the Dow. So whilst I was working on the Dow trade markup figures, trying to find the optimum, the DAX moved sharply lower, as you can see there, trading nicely. Buying pressure coming in there. You can see the pros getting out of the trade at this level. But eventually succumbing and trading down to the previous day's low. And as I've mentioned before, the previous day's low, you can see them buying off this as well. The prices were forced lower and then reversed, and that was it. It was straight back to the close and the high, triple high that you can see there. So let's have a look at news for today. We've got MPC member, Monetary Policy Committee member Haskell speaks at midday. US unemployment claims, again, another 1.3 million, which will take us close, I think, to 55 million job losses in the US. And then we've got the CB leading index as well, which is forecast slightly lower there. This is at 3 p.m. Again, at the moment, treat all economic news items as high impact because, again, I don't know why they've downgraded these, but they'll be used, if necessary, to move the markets. So whilst we're here, let's have a look at the overnight, and let's see where we are currently. So price is really quiet on the overnight here. 50-point range is all we're seeing from here to here. We were above the DP and the 200 bar moving average, then we came back, and now we're back above. But very, very quiet, so don't know what's going to happen this morning when the markets kick off. But let's have a look at the daily chart. Yeah, we can see that it's really quiet. Yes, it's the first week of the school holes, which of course is slightly odd given that most children haven't been at school, but most people are still taking the holiday, so Yeah, bit of a strange year, but I don't need to tell you that. So yeah, yesterday was quiet, and even more quiet on the overnight. We're stuck in a new sideways range developing here. So just on the side of caution that it could be a quiet kick-off this morning when the market opens at 8 a.m. Right, let's have a look at the Dow yesterday. So I got back on stream just as the Dow was about to open, so I'm going to fast forward. And again, this is purely experimental at the moment, looking to find the best option for the Dow. So prices kicked off, you can see here, and then we had a potential buy signal. There it is there, and again we've closed above the 200 bar moving average. This is key. We've got the buying in there, which you can see here. It's in this bar, followed by further buying going through the BRN, but we've got resistance here that we need to take out as well. So I'm just going to fast forward through this, and let's see how things panned out. So the trade is filled, the market starts to move, and again you can see the buying coming in here as the momentum starts to move to the upside. We've got the DP, we've got the BRN, we've got the close as potential targets. Now we've broken this. Stop is at break even, as currently get the right tool, 41 points on the table there. So when we get to the DP level, there's nothing wrong with taking the profits, because this is a major area of psychological resistance, and prices continue to move high. And you can see there we're up to 63 points. So if you want to take the profits off the table, there is absolutely nothing wrong with doing that. You're trading into the momentum. The problem is, what if it continues higher and you're not in it? That's the problem. So the 5 bar moving average is now starting to move along with this, and taking profits for me is the most difficult thing for any trader, because you don't want to take them too soon. Then you have the opposite, where you wish you'd taken them, because it then reverses and moves lower. So to make it as mechanical as possible is the best way, and unemotional, as by using the 5 bar moving average there as a measure of short-term momentum. So prices do trade to the DP level, and then they I'm just looking around at other time frames to get some ideas, and you can see there we're now stuck at the DP level, and the 5 bar moving average is moving up with prices. They come down, have a look at it, but they don't close below it. They then start to move once more. Now we're at the close and the DP, and you're sitting there now with a potential 81 points of profit. And then prices come back to the DP, they find support at the DP. Again, prices fail to close below the DP, and then now stuck at the close. In order to drive through this, we're going to see professional buying. And once again, prices come back to the DP, and there you can see now we've closed below the DP, sorry, the 5 bar moving average and the BRN. So it's difficult to decide when to take the trade, the money off the table. As you can see there, at one point you're sitting with 100 points, but it always is difficult. You're just through the close, but prices aren't trading any higher. There's a bit of a clue there. We get an increase in the volume, but it would have been nice to have seen a red bar inside of the green to show that potential weakness. So then the market is waiting for the crude oil inventories, which used to be a high impact news item, and prices trade sideways. And as you'll see, the market got into a sideways move, and you can see there the losing trades as the market's in that sideways move. The momentum just disappeared completely out of the market, waiting for the news, and you can see here prices are just sitting in this sideways move. And as I've said before, if you've made 80 or 90 points in the first trade in the Dow, well, there's no point in sitting around. Go and do something else. It's summer, and no point in waiting for the crude oil news to be released. Eventually it does get released, and then the market reacts to it with a potential buy signal there, and prices then again get stuck in a sideways range. We close at the scalp, and then the market attempts to move higher. There's your potential weakness to indicate that we could see some profit taking because of the resistance we've got to the left, and then prices put in a second one and then start to come back as well. And I think that was it. We got the potential sell signal there. Market last time it came down to this level failed. We got some buying here as well. And also, this is very important. If you look closely here, you can see that we've got a move to the downside on very high volume. We've then got some further high volume, but this one is key. This bar here, let me just isolate this, and let me just see if I can change the color. This one is very important, because as the market came down to the entry price, you can see that the volume is far greater than the previous bar, and it is narrower, and prices have also closed higher. This is the pros buying back at this level for the reasons I gave earlier, over to the left, and then prices reverse and move higher. And now we're into the 4 p.m. Again, prices trading up to the scalp and the BRN there, and then trading sideways once more. And I think this trades until 4:30 before it finishes, but 4 p.m. is long enough for the Dow. There you go. Is long enough for the Dow. But just coming back to this area again, if you can read the volume, you can actually minimize the number of points loss in a trade, which again I've shown with dozens of examples in the market alert and the analysis. And once you start to learn to read the market by bar, it really does give you a significant edge when it comes to trading. And I'm going to get these highlighted as well, get these programmed in so that they're a lot clearer. You haven't got to try and figure them out. They'll just show up in the chart. So I'm just working on the criteria for that as well. Okay, that should do for this one. Let me just have a quick look around, see if there's anything else that I've forgotten. The implied volatility is interesting in the Dow as well, because we're back to these lows. We're heading into the summer where it is generally quieter. The lower this goes, the better, because that means that when everybody returns in September or late August, we will see the market volatility pick up and hopefully get a bit more of this sort of activity where we can really load up and make some really good profits. So that is the Dow implied, and I think that is it. Okay, that's it for today. As ever, thanks for watching. See you in the next one.